Ever walked out of a bank and wondered, how do they afford this giant, fancy building? You deposit your money, they keep it safe, and maybe you earn a tiny bit of interest. It doesn't seem like a blockbuster business model, does it? Well, today we're pulling back the curtain on the world of banking. We're going to uncover how banks really make their money, and I'll give you a hint. It has a lot more to do with you than you might think. Get ready, because what you're about to learn will change the way you see your bank account forever. So, let's start with the basics. The thing we all learn in school. Net interest, margin. It sounds complicated, but the idea is super simple. Imagine you deposit $1,000 into your savings account. The bank might pay you a small amount of interest, let's say 1% per year. That's $10. Now, the bank doesn't just let your $1,000 sit in a vault gathering dust. Oh no! They turn around and lend that same $1,000 to someone else, maybe as a car loan, a mortgage, or a business loan. But they charge that person a much higher interest rate, say 6%. That means the bank earns $60 in interest from the borrower. So, they made $60 using your money and only paid you $10. The $50 difference? That's their profit. That's the net interest margin. Now, multiply that simple transaction by millions of customers and billions or even trillions of dollars. Suddenly, those tiny percentage points add up to a staggering amount of money. This is the bread and butter of traditional banking. It's the engine that powers the entire industry. They are essentially borrowing money from you at a very low cost and lending it to others at a much higher price. It's a brilliant business model, and it's been working for centuries. But wait, there's more. So much more. If you think banks only make money from lending, you're just scratching the surface. Let's talk about fees. The dreaded fees. Ever been hit with an overdraft fee? A monthly maintenance fee? An ATM withdrawal fee from a different bank? A wire transfer fee? Late payment fees on your credit card? The list goes on and on. These might seem like small, annoying charges, but for banks, they're a gold mine. Each individual fee might just be a few dollars, but when you add them all up across millions of customers, it becomes a massive revenue stream. In fact, for many large banks, fee income can account for a huge chunk of their total profits. Think about it. Overdraft fees alone can generate billions of dollars for the banking industry each year. It's a powerful reminder that banks aren't just holding your money. They're providing a service, and they found countless ways to charge for every little part of that service. From account maintenance to simply moving your own money around, there's often a fee attached. It's the death by 1,000 cuts approach to revenue, and it's incredibly effective. Okay, so we've covered lending and fees, but we're now moving into the really big leagues. Let's talk about investment banking. This isn't your local neighborhood branch. This is the Wall Street side of the business. Investment banks don't primarily deal with regular folks like you and me. They work with huge corporations, wealthy individuals, and even entire governments. So what do? They help companies go public through an initial public offering or IPO. When a company like Facebook or Google first decides to sell its shares on the stock market, an investment bank manages the entire process. They figure out the share price, find investors, and handle all the complex paperwork. For this service, they take a significant commission, often amounting to hundreds of millions of dollars for a single deal. They also help companies merge with or acquire other companies. Imagine one giant corporation buying another. These are multi-billion-dollar deals, and investment banks are the matchmakers and deal makers, advising both sides and helping to finance the transaction. Again, they earn enormous fees for this advisory role. And that's not all. They trade stocks, bonds, currencies, and other complex financial instruments for their own accounts, a practice known as proprietary trading. They are essentially using the bank's own capital to make bets in the market, hoping for a big payoff. This is higher risk, higher reward, and it's where some of the biggest profits and losses in banking are made. Now let's get to the heart of the matter, the central idea of this video. If you're not paying for the product, you are the product. We hear this a lot about social media, but it applies perfectly to modern banking, especially with the rise of free checking accounts. How can a bank offer you an account with no monthly fee, a free debit card, and free online access? Are they just being nice? Not quite. They're making a calculated bet on you. First, your deposit, even if it's in a non-interest-bearing account, is still capital they can use to lend out and earn that net interest margin we talked about earlier. Free money for them. Second, they know that over time, you'll likely need other services. You'll need a car loan, a mortgage, a credit card, or an investment account. And since you already have a relationship with them, who are you most likely to turn to? Exactly. They see your free checking account as a gateway, an entry point to a much more profitable, long-term relationship. They're playing the long game. They might lose a little money or break even on your checking account today, but they're confident they'll make it back and much more over the course of your financial life. They're building a customer profile, understanding your habits, and waiting for the right moment to offer you a product that you need and that they can profit from. You're not just a customer, you're an asset. You are the product that they are cultivating for future revenue. And how do they get so good at this? Data. Your data. Every time you swipe your debit card, you're giving the bank a piece of information. They know where you shop, what you buy, how much you spend, and when you spend it. They know your income from your direct deposits. They know your major expenses from your automatic bill payments. They are building an incredibly detailed financial picture of you. This data is unbelievably valuable. They use it to create sophisticated algorithms that predict your behavior. They can determine with surprising accuracy when you might be in the market for a new car, when you might be ready to buy a house, or even if you're a good candidate for a personal loan. This allows them to target you with highly specific, personalized marketing offers at the exact moment you're most likely to say yes. It's why you might suddenly see ads for mortgages after browsing real estate websites. It's not a coincidence. Your bank is using your data to sell to you more effectively. In this sense, your financial life isn't private. It's a data set, an open book that your bank is reading very, very carefully to maximize its profits from you. So, what does this all mean for you? Should you be angry? Should you close your bank account and stuff your cash under the mattress? No, not at all. Banks provide essential, valuable services that make our modern lives possible. The key isn't to reject the system, but to understand it. Knowledge is power. Now that you know how banks make their money, you can become a smarter consumer. Shop around for the best interest rates on your savings. Don't just settle for what your current bank offers. Read the fine print and be aware of the fees associated with your accounts. Can you avoid them? Are there banks that charge fewer fees? When you're looking for a loan or a credit card, compare offers from multiple institutions. Don't just accept the first one your bank offers you out of convenience. Be mindful of your data. Understand that your financial habits are being tracked and used to market to you. By understanding that you are, in a way, the product, you can start to leverage your own value. Banks are competing for your business, for your deposits, and for your future borrowing needs. You are the prize. When you know the rules of the game, you can play it to your advantage, making sure the relationship is mutually beneficial, not just a one-way street where all the profits flow to them. So, the next time you walk into a bank, you'll see it with new eyes. You'll see the intricate machine working behind the scenes. From the simple act of lending to the high-stakes world of investment banking and the powerful engine of data analysis. You'll understand that your simple checking account is part of a much larger, much more profitable strategy. And with that understanding, you're no longer just a passive participant. You're an informed player, ready to make the financial system work for you. Thanks so much for watching. I hope this gave you a whole new perspective on the world of banking. If you found this video helpful, please give it a thumbs up and consider subscribing for more content that breaks down the complex world of finance. Drop a comment below and let me know what you think. Did anything here surprise you? See you in the next video.